I'm Nicole Bako, an IRA specialist, and I'll be your host today. But before we get into the material, we have a quick video to play for you that I know that you will enjoy. You'll recognize some familiar names and faces from the Quest family.
Another downturn for the stock market. How on earth am I going to make money and retire at this rate? There has to be another way to invest my money safely.
There is.
Who said that?
The disembodied voice in your kitchen.
Oh my! Wait, what other way is there?
It's something called a self-directed IRA.
A self-directed IRA?
Yes.
Well, what does it do then, huh?
A self-directed IRA allows you to use your 401k and IRA money to invest in alternative assets such as real estate, notes, and private entities. With self-directed IRAs, you can take control and diversify with alternative investments that you're knowledgeable about, without the uncertainty and fluctuation of the stock market.
Well, that sounds like a swell idea. How do I get one of those?
All you have to do to get started is open up an IRA with Quest Trust Company. You can speak to one of our certified IRA specialists and submit an application in just a few minutes.
How grand! I think I'll call them right now.
But wait, there's more.
There's more.
Don't get burned by the stock market. When you open up an account with Quest Trust Company, we'll send you a free toaster. That's right. When you open an account right now at Quest Trust Company, we'll give you a free toaster. All you have to do is use promo code TOASTER and call 1-855-FUN-IRAs or send us an email.
All right, guys, I hope you enjoyed that video. That was our president, Nathan Long, and our very own Nicole Fana from our marketing department. We had a lot of fun making that video. And yes, we are giving away toasters. I'll get to that in just a second. But today's guest is Mr. Scott McAlpine. I have made that mistake twice today. I apologize. Scott McAlpine. We'll be talking about evaluating the deal for and comps for single family real estate investing. So we're really excited. Thanks so much, Scott, for being here with us. Before we get started on our presentation with our guest of honor today, I'm going to share a little bit of information about who Quest is and what we do. All right, looking good, Syed?
All good.
All right, perfect. So have it on the right screen. So thank you so much for joining us on Self-Directed Saturday. We're so happy that you're here. And who is Quest Trust? Who are we? What do we do anyway? So Quest Trust is an IRA custodial company out of Houston, Texas. We are the largest in the state. We were started by two brothers, Nathan and Quincy Long. They are actually investors themselves. So they built the company around what the client experience should be. So we really try to make everything easy and smooth going for our clients. We have over 20,000 active investors across the country. So no matter where you're joining in today, we can help you and get that going for you. We have $350 million in undirected cash. This is actually opportunities for lenders and borrowers that can come together and fund these real estate deals that we'll be talking about. So make sure you're getting in touch with your IRA specialist about that. Of course, we can't go without our disclaimer. This webinar, like all of our webinars, is for educational purposes only. So make sure you are connecting with your attorney, your CPA, your professionals, you're doing your due diligence on your investments before going through with them. Very important there. So what is a self-directed IRA and why should you have one? So self-directed honestly is just a marketing term, and it means you get to direct us yourself. You get to choose the investments. You tell us how to direct the account. At Quest, we hold private assets only, like real estate, promissory notes, private entities. So self-directed IRA, an IRA is just an IRA is an IRA. They're governed the exact same way they would be at any other custodian. Quest just has a special platform allowing you to invest in these alternative investments. So great benefits, of course, diversification. So opposed to just to having the stock market, stocks, bonds, mutual funds, we now can open up a whole new world of these alternative investments for retirement. Tax savings, of course, the traditional and the Roth IRA The traditional is a pre-tax, Roth IRA is an after-tax. We would love to tell you more about that in a consultation with an IRA specialist, but certainly some tax savings to be had with all of our accounts. Social investing. So a lot of times people are actually investing in their own community or communities nearby to fix and flip houses, start rentals, fix them up, get new families in there, so they can really see how they're helping their community right there. And that's really special to us. And of course, invest in what you know best. This is where it's your time to shine with your education on planning your retirement. So if you're really knowledgeable about real estate, lending money, promissory notes, investing in syndications, this is where you can put your knowledge to work to save for retirement. These are our 7 types of accounts here at Quest Trust Company. I'd love to tell you more about all of them, but we just don't have time right now. So make sure you're getting in touch with your IRA specialist to see which one is best for you. Investment choices. This is our 3 main asset classes that people invest in with us. But honestly, there's more. Oil and gas is not listed on here. There's more things that you can do in all 3 of these classes. These are just an example of some of the things you can do with your account at Quest. Our client portal, we just revamped it in April. There's so much more you can do on there now. Pay your expenses, upload documents. You can actually process all of your investments now online and get rid of that emailing back and forth, account statements and everything else. So make sure you're checking out your client portal, guys. All right, we offer endless free education. Like right now for your self-directed Saturday, we also host a Tuesday and Thursday class at noon Central with another great guest speaker. Of course, our self-directed Saturday that we're here now. YouTube channel, we have really worked hard on this. Our marketing department has just done an amazing job. We're actually streaming live right now on our YouTube channel. This webinar, as of all our webinars, will be under the video section, and the YouTube channel does have additional videos on self-directed IRAs, investing, tons of information there. Great resource. Our education center on our actual website is also full of classes, articles, and we have a really amazing blog that we're actually doing as well. Another great event we have, our virtual networking happy hour. This, of course, was born out of COVID, and it's really grown. So now, as opposed to just being able to network with, Houston, Austin, or Dallas at one of our live events, you can actually get in touch with investors all across the country. You get your time in the sun on camera to share a little of information about why you're there, what you're looking for. So come have a glass of wine with us or a beer. We'd love to have you. First and third Wednesday of every month at 6:30 Central. This event started yesterday, but we are going for another 2 Saturdays. So it's not too late to join our Quest Summer Intensive. You can still get the recordings. Next week, we'll be doing notes and then private entities. Yesterday was real estate, and you'll still be able to get those recordings. So make sure you get in touch with us to get that on your calendar. Here at Quest, of course, it pays to have friends. If you are a current Quest client and you refer another client and he opens an account, you will each get a $25 credit to your account as a thank you for referring someone to Quest. This is our latest rewards. We're so excited about it. Rewards for deposits. So if you've been kind of on the fence about moving your funds in, this is the time to do it. We have these great awards for you so you can see the qualifying deposit amounts on the right. And then we will actually credit your account up to $500 to cover your fees. So make sure, again, you're getting in touch with your IRA specialist to take advantage of this amazing offer. And of course, we can't forget about our toaster. You can also get a toaster and merge those 2 specials together. We actually just got a huge shipment in the office, so we are mailing them out. It's been a huge success, so make sure you get your Quest toaster. We're actually very easy to get in touch with us. So the QR code actually does work if you hold your cell phone up to that. We have a chat feature on our website that's actually manned by us, the IRA and transaction specialist, not a robot. So we're happy to help you there. Of course, give us a call, 855-FUN-IRAs. We do really make the process fun and easy to invest with us at Quest. Or give us an email. IRA specialist at questtrust.com. You can reach out to me personally at nicole.baco@questtrust.com. And today our moderator is a fellow IRA specialist, Evan Reeves. And so he's evan.reeves@questtrust.com to reach out to us for all of your needs. All right, so that is quite enough from me. I know that you really came to hear our speaker of the day, Mr. Scott McAlpine, and all of his amazing information that he is going to give us. So thank you so much, Scott, for being here. We're so appreciative, and take it away, sir. We're so excited to have you.
Awesome. Thanks, Nicole. Thanks for the introduction. That was some great information you shared right there. Let me start off by sharing my screen. Get my PowerPoint going. A little bit about myself. My name's Scott McAlpine. I'm the general manager of New Western in Houston, the central location. I've been with the company now 7 years. Originally from New Zealand, came over to the States on a golf scholarship at the University of Georgia. Did my degree in housing and consumer economics and wanted to get into real estate. So moved to Houston, found New Western, and this is all I've ever done. So hopefully I can bring some knowledge to y'all. Firstly, I'm not a licensed appraiser, so I just want to get that out of the way. Everything I'm going to show you today is just what I use to analyze deals on behalf of the company, on behalf of myself. So take it with a grain of salt. Again, I'm going to try to be as accurate as possible, but I just wanted to kind of get that disclaimer out of the way. First of all, I just want to give you all a little update on the market conditions. I know we may have people on here from around the country, but I just have access to the data from the Houston MLS. So what I've got right here is the latest report. Unfortunately, the June data came out yesterday, so I wasn't able to add that into the presentation. So what I've done is I got you the May data. So just to kind of give you a comparison, it'll give you basically compared to May last year. Obviously, it was kind of a unique time in May last year. We're kind of coming out of early COVID, March, April. We weren't really too sure what was going to happen in the housing market. May, things started to pick back up, and then I think June, July, it started to move pretty quickly. So there's still some pretty big discrepancies in the data from this May to last May. I think the June comparison was a lot closer, but just to kind of give you an idea, total property sales up 55% from May of 2020. Total dollar volume, so that's the total amount of transactions, up over 100%. Active listings down 40%. Single family home sales up 48%. The average price up 29%. Median price up 21%. Obviously, inventory down 1.9 months to 1.4, and then the pending sales up. So when I'm looking at this data and trying to figure out how the market's doing, the price is great, the total volume is great, stuff like that. But for me, I'm looking at active listings and months of inventory essentially is how hot the market is right now. We're at about 1.4 months. I think in February and March, it was down about 0.7 to 0.8. So essentially what that means is if there's not a house listed for 0.8 of a month, so whatever that is, 3 weeks, essentially there wouldn't be a house left on the MLS in Houston. So just kind of give you an idea of how much of a shortage there is in this current market. I know we're in other markets across the country. I know the Austin and Dallas-Fort Worth regions are in a similar situation to us, along with our Nashville and our North Carolina offices. So this seems to be a countrywide kind of trend right now. Secondly, this kind of breaks it down price point from May 2020 to May 2021. So what is kind of, I guess, stands out to me here is the higher price point properties, the 250 and above, are the ones that have increased the most. So first of all, it shows that the higher end market's hot. Secondly, it shows there's a real shortage in the 0 to 250K houses. A, because everybody's house has appreciated so much the last 12 months. And B, there's just not that many properties listed on the MLS. So 0 to 99 is down 34%, 100 to 150 down 31%, and then 150 to 250 is down 6%. And that's just basically in regards to the amount of sales for the month. Obviously, huge uptick in the 250 to 499 and the 500 to 749, and even bigger in the 750 and above. So we've definitely been focusing on some higher price point properties out of this office. It just seems that there's more demand for those and there's more accessibility to them. There seems to be better deals in that higher price point right now, just because there's more there's more of them essentially. This is just a little graph they put out with the medium and average house prices. You can kind of see it's been steadily increasing since since 2016. Obviously, I think the sharpest increase we're seeing on this graph is basically from December of 2020 to about now. It's been a pretty solid uptick right there. You always see a drop around the Thanksgiving, Christmas time. People out of town, people don't want to sell their houses, stuff like that. But after that, it's been a pretty strong bounce back for the Houston housing market, at least. So I'm going to start off by doing research. So anytime I'm evaluating a deal, what I'm going to do is I'm going to try to get as much information as possible. So first of all, basic information about the house. I want to get the square footage. I want to get the year built. I want to get the lot size. How am I going to do that? I'm going to use the tax records. I physically can't make it out to every single property. Right now, I have 16 agents in my office. About 10 of them buy houses. The other 6 of them sell them. So, they're bringing me deals, every 10 minutes, every 15 minutes, whatever it is throughout the day. I physically can't go out and look at these properties. That's kind of one thing that I like them to do. So they'll go out and inspect the property. When I'm doing my research on it, though, I'm just going to use what I have in front of me on my computer. So that's going to be the tax records. I'll also use maps. These have become a really valuable asset. I would say the last 3 or 4 years, just as they've got better and better. Google, Apple, and then HAR also has a kind of a satellite view. So establishing value. MLS data, that's what I go off of. I don't know about other states. Texas is a non-disclosure state. Unless you have access to the MLS, it's really hard to find out what a property actually sells for. So in that sense, if you are using Zillow, if you are using, Redfin, some of the other options, HAR, but you're not logged in, what they're going to do is they're going to give you a range, or they're going to give you an estimate, because they're not allowed to disclose the actual price it sells for. So try always get access to the MLS, whether it's through yourself, whether it's through an agent, whatever it is, because you need to know exactly what the house sells for, not a range, not as estimate, to kind of be as accurate as you can when you're doing your research and evaluating a deal. Standard criteria, and I'll dig into this a little bit more when I'm running comps, and I've got some examples of a property I ran and how I put it in there and stuff like that. But what I'm looking for is I'm looking for same subdivision. I'm looking for year build within 10 years. So if I'm a 1980 build, I want something that's 1990 or older, basically within 20% square footage. I'm looking for style. If it's a 50s ranch build and there's some sort of Art Deco stucco house that blew the comps out of the water, I can't really use that. It's not really a comparable style. Has it flooded? Hasn't it flooded? Kind of a big deal here in Houston. I don't know how many of y'all that are tuned in here locally, but we've had some history with flooding the last 3 or 4 years. So that's a big deal in regards to the resale value. And then school zones. I'm sure this is similar across the state and across the country, but school zones just seem to meander through neighborhoods for no reason whatsoever. There's a neighborhood not too far from the office here, Oak Forest, the elementary, then there's one at the top in the state. One side of one street is zoned to it, one side of the street isn't. It's 150, 200K difference in values in the property. So just stuff you got to look into that you maybe not think of off the bat, whether you're buying the house using your Quest funds or if you're lending on it, just things to keep in the back of your mind. Which comps to use? Obviously, we're going to use sold comps. Sold comps tell you exactly what the property sold for, how long it was listed for, list price per square foot, how many days to close, stuff like that. I'll get into that a little bit further on. Right now, we are using a few pending comps, kind of just to justify values. The reason why is we got sold comps that are, maybe selling, that have sold for $200,000 or $205,000. And then we've got 3 pending comps at 230, 240, 250, identical properties, 0 days on market, more than likely going to sell for less than above. We'll use that to help justify values just because of the way the market is right now. Again, we can't hang our hat on that. We can't tell, our clients that that's exactly what your house is going to sell for, but we're going to provide that information to them when we provide them with the package, just so that they can see that there is potentially some upside in this deal. Another way that I'll look at is bottom of the market. Right now, with the lack of inventory, it's really hard to find comps on deals. And often there's a lot of areas that don't have any active properties on the MLS for sale. So if we can get a property in a neighborhood or in a subdivision that has 0 actives and we're the cheapest thing that's sold in the last 12 months, even if the numbers aren't there, it's something that may be worth presenting to the investors, just an opportunity. Again, can't guarantee anything. We're not going to give it a value. We're not going to say it's worth this, worth that. However, we are going to say it's the cheapest thing to sell in that neighborhood and maybe worth, a good rental, owner finance, whatever it is. And then secondly, exit strategy. This mainly pertains to if you're flipping the property and the quality of what you're trying to do. When I'm running a deal, the easiest way for me to do it is look for the top of the market. So I'm looking for the best comps. I'm looking at what it costs to get to that level. I'm not looking at the mid-range comps. At the end of the day, I just want, our houses to be taken from the worst in the neighborhood to the best. So I'm going to take the best comps, and that's why I'm going to budget for the rehab. Sure, you can spend less and sell it for less, but at the end of the day, they'll just kind of convolute the data on our end. So I always go for the best comps, top of the market, and then budget my rehab based off of that. Evaluation. So using the correct comps kind of touches on what I went over previously, making sure they're in the same neighborhood, et cetera, whatever it is. I'm looking at days on market. Right now, if something's sitting on the market for a while, there's probably a reason why, whether it's a condition, a location, whatever it is. At the end of the day, everything's moving pretty quickly right now, but we'll look at days on market as how good of a deal it is. Actives, how many actives are in the neighborhood? I'll look at price per square foot, both listed and sold price per square foot, and we can actually pull up the difference too. So I can see if properties are selling below what they're listed for or above what they're listed for. Style and construction, obviously, like I mentioned, if we got the 50s ranch house and we got an Art Deco style, Art Deco stucco house in the neighborhood, can't really use that, just not really a relevant comp. And then pending comps and how many days they've been on the market. In this current market, if it's been on the market for 0 or 1 days and it went pending, often just based on what we've been seeing, it's sold at or above list price. Evaluation. So when I'm getting into the rehab side of my evaluation, again, keep in mind, I'm basing this off of pictures and I'm basing this off of what my agents are telling me and what I can find online. If I'm buying it personally, if I'm lending on it, if I'm buying it personally, whatever it is, I'm physically going out to these properties and looking at them. Again, for me, at the end of the day, it's just not efficient for me to go out to 20 houses a day and kind of get an accurate rehab number on it. That's what my agents are supposed to do so they can tell me what it's supposed to be. But when I do go out to these properties, I kind of, first of all, I walk the exterior, walk the interior. And what I'm trying to do is I'm looking for the 3 majors. So for me, that's roof, AC, and foundation. So if I have a seller's disclosure, I'm going to use that. I'm going to use every single piece of data I have. So I'm going to use a seller's disclosure. If they filled out how old the roof is, et cetera, so I can find out, if that needs to be replaced. AC, I'll go look at the AC. Luckily enough, some of these companies put the actual date the AC condenser was produced on it. Same with the one in the attic. Sorry, I'm slipping my mind. I can't think of it right now. And so I'll use that to kind of get a gauge on whether it needs to replace foundations. Here in Houston and probably other markets in Texas, it's quite a big issue we have. It's very common. We're looking for any sort of cracking, any sort of step cracking in the exterior and the brick and the actual slab itself. Once we get inside the house, we're going to look in the corners, see if we can see any movement, any settlement, etc. So those are my first 3 things I'm going to check off. If the foundation is really bad, I'm going to get somebody out there and get them to measure it. A, to know how many pairs they need, and B, if it is a big enough foundation job, it's probably going to need plumbing. If it has the old cast iron plumbing, as you start moving these and leveling these foundations, they have a tendency to crack, and you'll have to replace the plumbing. Again, you've already dug out under the house to do the piers to lift it. You might as well knock out the plumbing at the same time. So if it's a big foundation job, I'm getting my foundation company out there to look at it and evaluate A, how many piers does it need, and B, when you do this, if we have the old plumbing, you're going to crack it. If it's a yes, I need to budget that in when I'm doing my evaluation. Know your numbers or bring somebody that does. Again, if you're going out to these deals, if you're an investor, if you're looking to lend your IRA money to another investor and you want to get eyes on the property, there's no point in driving out there if you don't know what you're doing. So if you don't, there's no issue with that, but take somebody with you. If you're going to spend your time going out there, you want to make sure you can get the answers to what you're looking for. So if you want to bring a contractor, an engineer, whatever it is, I would recommend always bringing those with you. The first time, you never know how many times you'll get access to these properties. Whether you're buying from us, another wholesaler, off the MLS, whatever it is, some people have certain restrictions about getting in once, twice, et cetera. So I always like to kind of do my due diligence at the first stop. Know your price point and finishes. I can't put laminate flooring in an 800K house. It's just, common sense these days. So I need to know exactly what price point I'm looking for. So I've already ran my comps. I know the ARV or the current CMA on this property is 600 grand. I know, I'm going to need real hardwoods. I'm going to need custom cabinets. I know I'm going to need raised ceilings. I know I'm going to need that. I'm going to check all that off before I go out there. So when I walk the property, look around, I know exactly what I'm going to get into. Engineering and planning costs, depending on how big the remodel is, potentially you're going to get engineers to draw up. If you're taking out walls, putting in beams, again, if you want to get designers, planners involved, there's costs involved with that. So just something to keep an eye out on. A wholesaler, us, whoever in New Western, we're not going to, budget in, planning costs and stuff like that. We're just going to give you the round number. We're just going to say, hey, you can buy the property for this price. Do you want it? Yes or no. Thirdly, length of rehab. I'm kind of keeping that in the back of my mind, mainly just because the holding costs. Property taxes are very high here in Texas. If you are taking out some sort of loan, whether, I guess through someone at Quest or from another lender, whatever it is, you got to kind of keep in mind if there's interest points, stuff like that. Final review. So this is the final review of my evaluation. If I'm just trying to give a number to one of my agents and what we can offer on a property. Gather all the information. So I'm going to get everything together. I'm going to look at my comps. I'm going to get the tax records. I'm going to look at the tax records, see how big the house is, et cetera. I'm going to show you that here in a second. I'm going to see what the ARV is. I'm going to see what the pictures look like. I'm going to establish all my relevant numbers. So I'm going to see what the ARV is, how long we're going to be our clients will have to hold on to this property, how long it's going to be on the market for, et cetera. Weigh them all in. So, numbers game. What do they need to make on this deal? Where do I think they need to be at? What would make an investor happy on this deal? Length of rehab, risk and reward, and then I establish my price. So at the end of the day, that's kind of how I'm backtracking into it, doing my evaluation. Kind of real simple. I'm going to dig into, I guess, the different facets of it here in a second. When I go into comping a property, I've got a specific property that I just pulled off the MLS that I wanted to show y'all and kind of give you how I do my rundown from start to finish on it. So let me jump into running comps. Again, research is basically the same. So at this point, I'm getting the basic information. I'm using the tax records to do so. I'm looking at maps, not only aerial maps to see what this property looks like, but I'm also looking at the flood maps. I want to make sure, is this in a flood zone? Yes or no? Has it flooded, et cetera? I'm looking for any additional factors, and I'm going to go straight to the MLS, and that's going to use to pull my comps to get my CMA together. So same thing as I spoke in the valuation, I'm going to keep it the same within 6 months, but no later than a year. Same subdivision, same school zones, plus or minus 10 years from the subject build date. Similar beds and baths, style and construction, and then additionally pool and lot size. Those are things I want to keep an eye on, especially with the cost of building pools, et cetera, these days. It's something that you can't really, comp a house as a pool if you don't. So there's a couple of different ways to pull the tax records. This is, I believe this is public access. I think it's if you go to Harris County tax records, anybody can pull this up and you can put the address in for the property. So this specific property I'm looking at, it is listed on the MLS. I have no affiliation to it. It's just one I picked because it was active. It happened to come on one day. I was like, I'm just going to choose this one. So 5726 Creek Bend. So what I'm looking at here, I'm looking at the address. I'm looking at legal description, see what neighborhood it's in. This is helpful when I'm pulling my comps to make sure I stay within the same neighborhood. And then what I'm looking at is the land area and the square footage. So I'm looking at this property is 2,400 square feet, 9,600 square foot lot. There is more information on there in regards to appraised values, and this is obviously done by the city. I don't look at that. I don't care if it's appraised at $600,000 and I can pay $300,000 for it, or I don't care if it's appraised for $50,000, I can pay $300,000 for it. At the end of the day, that's just what the city wants you to pay your taxes on, and doesn't have much correlation to the actual value of the property. So this is public access. I use this one. This is Realist. And again, I don't know how big this is on y'all's screen, so I don't want to, I guess, dig into it too much because y'all probably may not be able to see some of these smaller things. If you want to come back to this and zoom in on it, there's some really great information included in these, and this is from the Harris County Appraisal District. So for me, I'm looking at the top here, 3 bedrooms, 3 bathrooms. Again, this one is listed. It's listed at $399. This is when it was listed. I'm looking at year build, MLS square footage, and the lot size. One other thing I'm going to look at is down here, and I don't know if you can see this, but maybe if you want to come back to it, is the taxes. I can see what the taxes were in 2020 on this house. So if I'm budgeting, let's say it's $10,000 in property taxes for 2020, I think this is going to be a 6-month remodel. I know that I can budget $5,000 for property taxes, give or take a little bit, based on the time of the actual rehab. Again, it'll break down your tax rate here, where it'll come from, and how they get to that total. Secondly, the next thing I'm going to go to is this page right here. This page is really important for me because it tells me the square footage and it tells me the size of the garage, and if it has a garage, if it's detached or if it's attached. Again, keeping in mind, I don't get to go out to most of these properties. That's what my agents do. So I need if they don't have the data, if they're going out to it, I'm going to run it while they're gone. I use this to get my data. If I'm going out to the property, I can tell it has a garage. I can see how many bedrooms and bathrooms it has. I'm not going to measure it, but I can get all the other information. So I can see it's 2,400 square feet, 2,471, and it has a detached 400 square foot garage. So that's basically all I'm looking for in regards to information from the tax records on this specific property. Here's a couple different views. This is the 3D Apple map. If you have an iPhone, if you have an Apple computer, they seem to be catching up and maybe passing Google when it comes to clarity. You can zoom in on these things. You can get up feel like you can almost get inside the house on some of these, depending on how frequently the actual camera car went by. But it's very clear. You can get 3D views, etc. So I'm going to look at this. Obviously, I can see, here's the house, here's the garage. This may or may not be concerned to me. I don't know. Obviously, that looks like some sort of carport. Have they converted the garage? Have they not? Is this now without parking? That's just something that comes to mind, straight off the bat when I see something like that. Again, maybe nothing, probably is nothing, but for me, I look at these all day, every day. I'm trying to find all the issues with them and get ahead of them before I pull my number on it. Over the right here, I got a satellite view. Again, I can see this is kind of interior lot on an interior street. This is a good one if I want to see, I can see if it was one of these properties, it's backing up to power lines. If it's one of these properties, it's across from a school. If it's one of these properties, it's on Hillcroft, which is one of the major streets. I like to go satellite view from above. I can see what's around me. I can see if my neighbor has 50 cars in the backyard. I can see what's going on. I'll zoom in and kind of give me a good idea of the property. Again, best thing you can do is go out to it. This is the second best option. Second map I'm going to pull up is the flood maps. If you have access to MLS, HAR, they do it for you. So I can see right here where we're located. Fortunately, with this property, we are not located in the flood zone, and this one has not flooded. Again, you can be in a flood zone. For those outside of Houston, you can be in a flood zone and have never flooded. It's just to do with the elevation. So again, that just brings up some issues when it comes to rehabbing, improved values, how much you can pull in your permits, stuff like that. If you don't have access to MLS or HAI, you can go to the Harris County Flood District, type in your address that you're looking at, whether you're lending on it or whether you're looking to buy a property, and it will pull it up for you. So you can see exactly, identical, right? Neither of these. Orange on this map is non-designated. On this map right here, obviously the gray area, you're not in the flood zone. So that's good news. So here's my MLS comps. I just kind of took a couple different map views here, then I wanted to kind of show you the parameters I put in the middle here. So first of all, I put in my school zones. I wanted to make sure I was in the same school zone. So you can see right here, these lines, you can see what I was talking about. There's no rhyme or reason. I mean, I'm sure there is, but I don't know why. Some of these, school zones go down half a street, cut through the next street, zigzag through neighborhoods, whatever it is. Just got to be really careful because, different schools do have different ratings and stuff like that when it comes to, I guess, how good they are, whoever rates schools, and, where buyers want their kids to go, whether it's elementary, middle, or high school. So first thing I'm going to do is look at the school zones. I'm going to draw my map in this area within my school zones. This is kind of my filter. So if what I'm doing here is I've gone back 180 days from when I ran this, which is a couple days ago. I'm looking for actives, option pending, and sold. I'm looking for single family properties. And then I got my square footage. So I want under 2,700 square feet. I want to stay under 1980. I think we're in 1970 build. And I want to make sure we don't have a pool. So again, if you have access to MLS, I would recommend doing this. If you don't, whoever runs your comps for you, I would make sure that I kind of put their filters in the similar parameters to this. Again, come back to this, reach out to me directly, text me, call me. I'm happy to help out. At the end of the day, If I can't sell you a house, I'm going to make sure you don't get into a bad deal. I'm happy to run comps for anybody on here. Just at the end, I think it's got my phone number and email. I'll be happy to help out. On the right side here, I filter the results. So you can kind of see the difference right here. Few less properties. And then you can actually see the ones that I've selected that'll show up on the next, a couple of the ones I've selected, sorry, that'll show up on the next page. So here's our subject property. Obviously, we are active on the MLS. Just to kind of give you a little breakdown, red is sold, orange is pending, either option pending or actually pending, and then obviously green is active. Anytime you see a, what did I see, like a 2 like this, that means this property has been sold twice within the last 6 months. Probably a flipper. If I click on that, they would have bought it for X amount of price and sold it for a lot higher price, or within 6 months. But anytime there's 2 pins like that, you can click on it and see the before and after listing. Oops, there we go. Pictures. So what I like to do when I don't get to see the property, I like to pull up the pictures. So fortunately, this one is listed. We don't get too many deals off the MLS. About 90% of our deals are off market. So I don't have the luxury of going to the MLS, clicking on the pictures, and looking at them. When I do, I make the most of it. So this property is listed. Again, I just had to take a screenshot. There's about, I don't know how many photos, 30. And so I'm going to kind of walk through this property and see what I'm working with. I got some sort of wood floor in here. I can't tell if they're original. I can't tell if they're not. If they're original, they could possibly be refinished. And coming into this room, I can see it's tile, whatever. I looked at the bedrooms, bathrooms. This house is basically original. So, you know, again, well looked after. It looks like the homeowners, you know, it's not all tore up. No big deal with it. And then on this side, this is what I'm trying to make it look like. So what I've done here is I pulled up one of the pictures of my comps. So this one's on Hummingbird. And I'm looking at this and seeing what I need to do. So, you know, you can tell I need to probably take out a wall in the living room. I need to open up the kitchen. I need a nice big island. I need custom cabinets. Look at this bathroom. I need a floating vanity. I need high-end fixtures. Looks like I'm going to need an office, paint the outside. These are all just kind of basic things, beautiful mudroom, etc. So when I'm running my numbers, I know that basically I'm going to need to do everything in this house, from electrical, probably plumbing. I have to raise the ceilings. You can see right here, they got a little tray ceiling, helps everything feel a little bit bigger. Nice French doors in the back, nice natural light. That's what I'm doing when I'm running my numbers on these specific deals. So I'll go through each one of the comps that I'm using to kind of verify my numbers and look at their pictures and see what they're working with and base my rehab estimate off of that. Again, I'm not a contractor. I'm not an appraiser. I'm not going to give you a perfect value. I'm not going to give anybody a budget on rehab. I'm just going to do what I can to, based on my experience of giving a rough estimate, when I put my numbers out. So what I've done here is I've filtered down the comps. So you can see subject properties here. These are the 5 comps I've filtered. Again, keep in mind, this was the last 6 months. And you can see how close these properties are. They're all in our neighborhood. We're in Park West. They're all in Park West. None of them have a pool. 3-2, 3-2, 3-2, 4-2, 3-2. That's bedrooms, bathrooms. Here's the number of garage, 2-1, 2-3, 2. So I'm looking at that, making sure that one of these comps doesn't have a massive detached 4-car garage with game room in or anything like that. Built 1960, 1962, 59, 62, 59. We're in 1960 build, perfect. Lot size, pretty much similar. I think we're at 9,700 and change, all within reason there. And then square footage, 2298. We were 2470, I think. So we're a little bit bigger than all of these, but at the end of the day, these are the best comps I had. You can see the close date. Actually, this one's one of these is a little bit older than 6 months. The other 4 are very recent. So you've got 2 from April, 1 from June, 1 from July. So these have all sold very recently. You can see their days on market: 11, 24, 0, 82, and 3. And then I'm looking over here at the sold price. So anywhere from 535 to 564. You can look at the sale price per square foot, and then it'll break it down for you down here. So basically across the bottom here, it's going to give you an average and a median. So the average, 3.2 is the average, 2,300 square feet, average sale price 552, days on market 24 average, and then the sale price per square foot. So again, I don't really get super detailed. I don't divide the price per square foot and times it by mine. I just get a ballpark figure in the sense that I know I can sell this house anywhere between probably 540 and 560. depending on the rehab, depending on the market, and depending on what's going on. And that's kind of what I'm looking for. These are great comps. This is just, solid deal. I don't know, what it's listed at probably doesn't make sense, but at the end of the day, this was just a good example of being able to pull really direct comps, same neighborhood, same school zone, same year build, same style, everything, and get a somewhat accurate, CMA on this specific house. So establishing the value, obviously, if I'm buying this myself, I'm lending money on it to somebody, I'm going to do all that first, and then I'm going to go out to the property. So I'm going to do a physical inspection. Obviously, like I said, check the foundation, roof, AC, stuff like that. I'm also going to drive the neighborhood. I want to make sure the neighborhood is nice. It's conforming. Everybody, is there an HOA? Is it not an HOA? Are there restrictions on what color you can paint your house? What do my neighbors look like? Stuff like that. So basically what I'll do then is I'll weigh in all the factors. I'll use the correct comps. I'll look at days on market. I'll look at actives, price per square foot, and then basically I'll put together a CMA, which will give me the value of the subject property, which is what this looks like on the right side here. This kind of just breaks it down a little bit. This is our subject property on the left here, 322, 2471 square feet. We're ranch style. We're built in 1960. Look at the comps. That's my CMA value, 535 to 565. Honestly, if it was me, we'd probably be a little bit on the higher end of that just because we are bigger than all the comps. So I'd like to think we're in the, the 550 to 560 range. Again, I would never tell anybody, hey, you're going to sell this house for 560,000 or whatever it is. I'm just going to give them a range of, hey, based on the comps I'm seeing right now, the current market analysis I just ran, this is what the similar properties in your neighborhood are currently selling for. And that's kind of all I can do, in my position. So that's it from me. I don't have too much else to share. I hope I didn't take up too much time or run too short or, not cover something that y'all are looking for. But that's my cell phone right there. Call or text me directly anytime. That's my email address. I'm happy to help out. I'm happy to look at deals for somebody. If you're concerned about an area or a neighborhood, not too sure where to invest, who to lend your money to, depending on what they're about to buy, stuff like that. If it's single family, I'm happy to help out any way I can. Outside of single family, I'm sure there's been somebody else on here the last month or so that's a lot more well-versed and stuff like that. So I think back to Nicole, is it? Syed?
Back to me. Thank you so much, Scott. We really appreciate you sharing all that wonderful information for us. Thanks so much for putting your contact information on there. I know we had that request. We'll leave that up for a second. We actually do have questions from our audience. Does that work for you?
Yeah, I got time. I don't know how to stop sharing, so I'll just keep this up in the background. Leave
up your contact information so people know how to get in touch with you. So let's see. First question, what is your biggest lead source?
New West as a company, or let's just say New West as a company, maybe.
Yeah.
Our biggest lead source is actually other wholesalers. We've kind of created this marketplace now across the country where we're buying a deal every 20 minutes. And we've got this marketplace where we'll just disposition out deals for other wholesalers, essentially. So they bring us their deal. We put the numbers together. We send it out to our team. We take care of it from there. We babysit it for them. We get it through title. We close on it. We then, double close off to our investors. I don't want to dig into that too much just in case people didn't know what's going on there, but that's what we do on that side. So that's our biggest lead source. And then direct to seller, marketing wise, stuff like that. So those are probably the two biggest, but mainly are the wholesalers. Okay,
perfect. Thanks so much. For someone starting out, they are asking, did they hear you correctly that Texas is a non-disclosure state, So if a home sold in the neighborhood I am buying, I will not know the price that it sold for? Is that accurate?
Unless you have MLS access. So unless you have
MLS.
an agent, can look it up for you. If you go to Zillow, they're going to give you a Zestimate, and they're just going to basically take a radius. If you're in Houston, you have access to HAI. Some of y'all might be familiar with this. If you don't log in and you just look at the map, it gives you a range. It'll say 500 to 580. So unless you have access to the MLS, you won't be able to see the actual close price.
Perfect. Thanks so much. We have another question, a reference maybe to the links and the sites that you use to get this information. Do you get most of it from the MLS site, or are there other sites that you use as resources as well?
So I get to most of it through the MLS, but there is access to Harris County Flood Control District, so you can pull up that map that's for the public to pull up. If you want to pull up the Harris County tax records, you can pull up the tax records for individual properties. You can write in an address. It's going to give you the square footage of the house, the lot, the owner's name, the taxes, stuff like that. But it's not going to give you the breakdown of, bedrooms, bathrooms, garage, all that kind of stuff.
Okay, perfect. Let's see. This question is, I'm guessing your company, buying in Texas only? And do you have to have a license to access the MLS?
In Houston, you do have to have a license to access MLS. You have to be a member of HAI. You then have to get additional MLS access. I don't know outside of Houston. I think Texas is like that. I don't know outside of Texas. Us as a company, we're in we've got 37 offices across the country. So we're in, I don't know, I should probably know this, but we're in most states. We opened up 12 additional offices last month. So we're pretty much getting into all the big markets. So if anybody has a deal they want to get rid of, and just go to the New Western website, and it's got the list of, office locations on there.
Perfect. Well, thanks so much. So it sounds like for MLS access, you kind of have to check with where you are, if you need a license or not.
Yeah, exactly. Yeah.
Okay, perfect. Let's see. One more question. What is the average return to expect reasonably? It depends on a lot of factors, but what would you kind of maybe say could be maybe some of the biggest factors affecting the return?
So, I guess it depends on the exit strategy. I'll give a couple quick examples. If you're looking at doing rental stuff like that in Houston, I can, in the parts of town that are, let's say, nicer, more stable, most of our investors that buy from us are looking for kind of 8 to 10%. This is just cash on cash, kind of net return. Take out property taxes, insurance, whatever they're rolling the property for, rental rate. Other parts of town that are gentrifying, turning a new leaf, a little bit more risk, stuff like that. They're looking for kind of 12 to 11 to 12%. So a little bit more risk, a little bit more unknowns, but a higher return in those parts of town for rentals. On the flip side, it's hard to tell right now because the market's, appreciating. We did the math on it the other day, and a $200K house has depreciated $6,000 every month for the last 12 months, just based off the data. So, it's hard to really know. You'll hear people talking about 80% deals, 70% deals, stuff like that. I'll be honest with you. We sell at 80 to 85%. Most people on there probably won't like that. We don't set the market. We just set a price, and our investors tell us what they're willing to pay based on, current market conditions. So, I'll be honest with you. If you do your first deal and you learn from it and you don't lose money, I think that's a win. In my first deal, I made a couple $1,000s or whatever it was in the first flip I ever did. But at the end of the day, the lessons I learned, they were valuable. I didn't pay somebody $15,000 to go to one of their seminars and get gurued by them or anything like that. I learned by making $1,000 and making my own mistakes and going that way. And then as long as you learn from your mistakes and move forward, 10 to 15%, I think would be great. Because if you can do it 3 or 4 times a year, that seems like a decent return.
I think that's a great thing to remember too. I do hear this from our clients as well, that you really do learn just by doing, really. And you learn some pretty invaluable lessons that you can kind of only learn by doing it by experience. So I really appreciated that answer. On the example that you showed us in the presentation, what would you offer? What is your rehab holding cost budget?
I knew this question was going to come. So we actually did buy this house. That's the only reason I did it. It was on the MLS. So I'll give you the exact numbers that we based it off of. Again, doesn't mean they're correct or whatever. So we offered 240. We offered 340 for this property. It was listed at 399 on the MLS. We ended up buying it for 347, and then we ended up selling it for 375. So that's what we sold it for to an investor. When I was running my numbers on it, I was going 560 times 0.8 minus 85. That's kind of give me some wiggle room. That's $363,000. I wanted to kind of build a little 10, 15 grand buffer into this, into the rehab budget on this deal, just because I hadn't seen it. I didn't know it's a higher end rehab. So I kind of buffed in another 15 grand, and that's how we got to the 347. So that's how I back into my deals. I run my CMAs. I get my after repair value, my CMA. I times it by 0.8. I take out my rehab, whatever I think it is, if it's $80,000, and, build some wiggle room and to make some money. And that's about it.
Perfect. Thanks so much for sharing that. I know that was a big question on everybody's mind. Another question that came up is about pools and how much value they would or they wouldn't add to a property. Like, would you consider maybe adding that if like the rest of the neighborhood had one, or I know that's kind of an iffy.
Yeah, honestly, no. Just the cost right now. I don't know if anybody on his tried to build a pool recently. I got a quote on a pool recently, but the cost to do so very, very rarely, makes sense. On a really high end deal, if we're talking, I don't know, $1 million, $2 million deal, and it's a 40 grand pool and you got a 500K rehab, not a big deal. But most of the houses we buy and sell, average price point's about $150,000, $160,000. A 40 or 50K pool's 30% of the value of the house. It just, doesn't really make sense. So I never comping, I shouldn't say never, but I try to avoid at all costs comping a house that doesn't have a pool versus a house with a pool. Now, if I have a pool and some of my comps don't have a pool, I'll use them and say, maybe we can get another $5 grand higher than that comp because we got a pool, but I don't justify it as a $40,000, $50,000, improvement over a house that doesn't have a pool, just because that's what it costs to do.
Okay, thanks so much. One more was about the exit strategy and and how you kind of evaluate how you would do that.
So
how would you put that together?
Yeah, so it comes down to the market, I'll be honest with you. So, we're fortunate in the way we're positioned in this market and the way we're positioned in this industry that we don't hold any assets. So that we do have to be ahead of what happens. So if the market's really hot like it is right now, there's very little inventory, things are selling over list price. I would say 80, 90% of our buyers are flipping these homes. They're buying them, they're rehabbing them, they get on the market as fast as they can. When we started in 2008, 2009, it was a little different market. The MLS was saturated. You could buy deals, whatever you want. We basically sold a lot of rentals off to funds at that point in time. So, for us, we'll just pivot. If this market slows down drastically for no reason tomorrow, I'm going to go out and find as many rental properties that make sense as I can. And I'm going to start, moving more rental deals because people aren't going to want to buy flips and be stuck with it. So it's a personal, that's the way we do it. In regards to our investors, I don't really see a rhyme or reason on why people do what. Obviously, I feel like the large institutional buyers that buy from us, most all of them, they rent. They buy them, they rehab them, they rent them out, and then they basically, will package them together or do whatever they want to do with them. The flippers, they come in and they want to do it 2 or 3 times a year. And I feel like a lot of people start off, on the flipping side and want to get that route, maybe build up some cash and start, getting into the long-term rental play. There are some restrictions with it. Obviously, if you are going conventional financing, you can only do 10 of them. And then, you can have 10 conventionally financed properties, and then you got to get into jumbos and stuff like that. So I see that a good bit. People will build up a little portfolio of 10, let them appreciate, cash flow, then make some money, sell them all off, start again kind of thing. They're not full-time investors. They're not doing this, as a 9-to-5 job. They're mainly the ones that, kind of do it on the side.
Perfect. I did have one more question. What would you tell somebody that's really just getting started, kind of like the first step they should take, or something they really should look at when you're really kind of starting out? What would you say to that?
I would say get out and about and get exposed to different facets of the industry. As meetups come back, I would kind of get into attending those, whether it's something, at Quest, or whether it's actually a wholesaler meetup, or whether it's just a real estate meetup. I would go and learn in person if possible. Again, I know I probably shouldn't be saying that in these times, but getting out and about, getting out to meetups, getting out to properties, getting on people's lists, getting on our list, getting on other wholesalers' lists. There's no harm in doing so. There's no cost involved with being on any wholesaler's list. It's one of those things where the more access you have to running comps, getting familiar with what to expect from wholesalers, what to expect from your lead sources, whatever it is, getting out and about. I probably wouldn't go and spend the $15,000 and do the flipping conference. At the end of the day, I don't know. I think that money, if you have that much money sitting around, it's probably best to get into it and start investing yourself rather than just doing that. So I think personal experience, but exposure, getting out and about, going and looking at properties, getting comfortable with the process, making sure you understand what you're getting into.
Perfect. Thanks so much. We actually had a couple more questions pop up. What is your opinion on rental rates for, it says SFRs, going forward as home prices have increased with renting being more in vogue? And the high-end SFR, say $1 million properties in Dallas. I know you're kind of Houston focused, but
we don't do too many $1 million plus deals down here. I'll be honest with you. It's interesting. I hear a lot of people in this Houston market say they're going to sell their house and rent because they want to capture the top of the market and make as much as they can. Then they're going to go rent for a little bit. In saying that, I could, again, just from my experience, I could see a little uptick in the rental market just because of that. But at the end of the day, I think these people are going to end up buying properties at some point in time. And I think everything's just going to correct a little bit. It's not going to come down. It's, don't quote me on this. I don't think there's going to be anything crazy happen.
Right.
I think there's just going to be a little bit of a correction. It's very inflated right now. It's the best I've ever seen it. I hope it lasts forever and it's awesome. But I'm a realist. I know it can't sustain like this. So I wish I had a better answer for that question. A, we don't do many $1 million deals, and B, we certainly don't do any $1 million rentals. So, I'm not too sure, I guess would be my answer.
Okay. When buying property from New Western, what is the purpose of a double close?
So the double close, and that's a good question. I figured this was going to come up if there was somebody on here who knew the transaction. The double close gives us a lot more control in the transaction. So obviously there's a cost involved with it. I get it. It sucks. There's 2 title policies. There's 2 escrow fees. There's stuff involved with it. But at the end of the day, when I sign a contract off to you as an investor, or I get a contract assigned to me, I lose complete control of the deal. I don't know if you're going to perform. I don't know if you're going to close. I don't know what's going to happen. And if this is a good lead source for us, or we promise this seller the world, or whatever it is, and that buy doesn't perform, if we've assigned to him, it looks really bad for us on our side. So there's multiple reasons why. Obviously, we can control the transaction. You don't know how much you're making on the property, which, at the end of the day, everybody's like, oh, I don't care what the assignment fee is. There's plenty of times we've assigned deals and like, oh no, you're making too much on this. So for us, it just gives a lot more control in the transaction. And at the end of the day, you just got to factor into the price. I can give you 2 numbers, and I do this a lot here in Houston. I'll put a house out at $150,000. If you want an all-in price, I'll sell it to you for $157,000. I mean, it's a numbers game. You just got to factor it in, know what it is, and it kind of gets back to starting in the industry. If you set that expectation from the get-go, and that New Western has a double close, like that's fine. Just adjust your numbers. It's going to be a 2-3% reimbursement on the closing costs. Just budget that in, and if the numbers make sense, including that, then then great.
Perfect. We're going to do one more question because we're kind of ending getting towards the end of the hour. Okay, so we're going to do one more question. Let's see. I'm going to kind of choose one that's kind of related to other questions, maybe. Do you use a title company when you buy or sell?
Yes.
Yes. Okay. Perfect. That was an easy one.
You can do another one. That was quick.
I'm sorry?
You can do another question because that was a quick one.
Yeah, that was a quick one. So we'll do one more. Let's see. For an SFR portfolio, does Scott look for cash flow or appreciation?
Depends on the market. In Houston, I would look for cash flow. Again, I think the appreciation is going to come. I know in different markets that we do a lot of business in, they're just going purely for appreciation. They're just hoping that the monthly rent covers the mortgage, and in 3 and 4 years time, they've gained 40-50% in appreciation. So I would look for both in Houston. Again, the higher appreciating areas, I feel like you're going to get a lower return on anyway as a rental. The lower appreciating areas, you're going to get higher monthly return on as a rental, a yearly return on as a rental. So it really depends on how hands-on you want to be and how safe, I guess, you want the investment to be. But for me personally, I'm looking to cash flow it. I know, I shouldn't say I know. I don't think it's going to sell for less than I bought it for in 5 or 10 years' time. So I'm just going for the monthly cash flow, have the residual income coming in, and then, I think it's going to appreciate a little bit on top of that.
Perfect. Well, thank you so much for being here today. Thank you for answering all of our questions. There's definitely more questions out there. I'm sorry, guys, that we didn't get to you, but Scott's information is here up on the screen. So make sure to reach out for him for any other questions that you have. Again, Scott, we really appreciate that you being here today. We had a great time, great information. To everyone out there, make sure you're getting in touch with your IRA specialist to see how you can use this information inside of a self-directed IRA. We're all happy to help you. Thank you to everybody that came today and that joined our presentation. We had a fabulous time, and we will be here next week again, same time, same place, 12 Central for Self-Directed Saturday. Again, thank you to everybody who came, and I hope you have a wonderful weekend. Thanks so much, guys.
Thank you.
Recording